We are now hearing of a potential currency pact between the U.S. and China, potentially even this week. What would that mean for both countries and their currencies?
Now, it seems that they're converging towards a deal. This is definitely good news. It avoids a further escalation. However, it's a mini trade deal. And a lot of the focus will be on the details on what happened with the tariffs that have already increased. We will expect the deal to include a detailed timetable of implementation of what it will take actually to eventually reduce the tariffs. The tariffs remain high for now. You avoid further increase. But the negative impact on the economy will continue. And I think such a deal will have implementation risks. So bottom line, it is good news if we do have a deal. It avoids the wars, but we're not out of the woods yet.
What are the implementation risks that you're talking about right now?
Now, I will expect steps that China will have to take to implement this deal, which, assuming that this takes place, then both sides will be able to reduce tariffs to pre-trade war levels, primarily addressing the U.S. concerns on intellectual property rights, on opening the markets in China. Now, we have to focus on the details, how long this will take, how difficult, challenging will be to implement it, to see whether this is feasible or not. And now we're talking about a timetable that will be just a few months, which actually will be a positive surprise, or will take much longer. We have to acknowledge that the tariffs that have already been increased are high and are affecting the economy. So the sooner we remove these tariffs, the better.
What are the implementation risks for the currency pact, especially for China? Because we continue to see a stronger U.S. dollar, right? The best house in a bad global neighborhood as we continue to see the global economic slowdown. So what are the risks for China of agreeing to this?
Now, I think having a trade deal is good news for China as well. Its economy has been affected by all this uncertainty. Any details on the currency, I don't think will be important in the short term. Anyway, China has a managed exchange rate mechanism. But we also have to say that as long as the trade tensions continue, this is what keeps the dollar strong. The paradox here is that the U.S. would like a weaker dollar, but trade policy protection actually supports the dollar. So for now, we do believe that the dollar will remain relatively strong. And let's not forget, it's not only the trade tensions between U.S. and China. We also have trade tensions between the EU and the U.S., which is still a risk.
Yeah, well, it's not just the dollar that's been keeping strong in this environment of uncertain trade outcomes and weaker global growth. It's the yen, of course, has been a powerhouse as well. What's your target for the yen?
Now, actually, still the yen remains undervalued. We do believe that even if we have a mini trade deal between U.S. and China, the uncertainty will remain relatively high. So we do believe that yen will also remain strong. Actually, might be the only G10 currency that might be stronger even for the dollar. Our forecast is in the next few months, dollar-yen may drop all the way down to 100. The equilibrium actually is between 90 to 95. So even at this level, yen will remain undervalued. We have still a lot of risks ahead of us. So risk of market uncertainty will still support both the dollar and the yen, but more the yen compared to the dollar.